Hello listeners, and welcome to Plugged In, the energy news podcast from Montel, where we bring you the latest news, issues and changes happening in the energy sector. In this episode, we're looking at CBAM, the EU's carbon border adjustment mechanism policy. Many across the sector, in energy and in commodities, are urging clarity and certainty before the start on the 1st of January 2026. In recent months, the European Commission has published what they describe as more simplified rules in regards to CBAM, but the industry is still waiting for 100% clarification on costs of the measure. So what impact is this having on trading today? And what are the challenges faced by the energy sector, but also for steel, aluminium and cement industries? I'm pleased to be joined by our UK reporter, Gabriel, who can tell us more. Gabriel, what are the recent changes that the European Commission has introduced in regards to CBAM?
Hi, Richard. Thanks for inviting me on the podcast this week. The most headline-grabbing change was that there will now be an exemption for importers bringing in less than 50 tons of CBAM-covered goods each year, which exempts about 90% of importers. So for them, that's good. The problem, obviously, is that electricity is excluded from this because you can't really calculate its mass, meaning that even the smallest volumes of imported power are still fully on the hook for CBAM payments. But more relevant to the energy traders is that the obligation to pay for CBAM certificates has been pushed back. Originally, companies would have had to start buying certificates from January 2026, but under the new proposal, that's been pushed back to February 2027. Businesses still need to track and report the carbon contents of imports during 2026, but won't need to buy certificates until the next year, giving companies a cash flow reprieve and time to get their ducks in a row in terms of the admin of CBAM.
That clarifies a lot there. But what has the response been, Gabriel, in terms of the people that you speak to, both from, I mean, you cover the UK and Ireland, but, have you heard from people sort of outside those countries in continental Europe, for example?
It's not exactly been seen as a huge simplification of the rules. The exemption for low-volume imports is a simplification for a lot of importers, but the energy sector has once again been left in the dark, which is kind of becoming par for the course for a lot of CBAM preparations. And as for the delay in payment, it hasn't really moved the needle at all. One analyst told Montel when this was first announced that the delay doesn't remove the financial burden, it just shifts when it hits.
If you could sum up the current challenges for CBAM, what is it in terms of what it poses for traders, both kind of, power traders or carbon traders across those two jurisdictions, UK and Europe, because obviously it affects other parts of Europe, but let's focus on the UK and our continental partners.
CBAM makes sense for industrial goods like steel and cement, but not electricity. And so the European Commission's decision to apply it to power trading is a bit of an odd one. Power can flow across borders instantly and is traded at 15 and 30-minute intervals, and it can't easily be tracked back to the source of generation. And under CBAM, traders and importers will be required to report where their goods came from, prove what carbon price, if any, was paid on them, and buy CBAM certificates if they can't prove zero emissions. And if they fail to do that in time, which is basically inevitable in the power market because it moves so fast, they must use the EU's default emissions values, which are based on average CO2 intensity for the exporting country from 2016 to 2020, which is really outdated and doesn't reflect times when renewable energy, say, is much higher in the mix. In terms of the UK, Brexit has thrown a spanner in the works completely. Without a formal ETS linkage between the EU and UK, power going from the UK to Europe will attract CBAM costs when exported to the EU, which will not only drive down power demand in Europe, but will also obviously incur costs for European importers. And as a side note, the UK is actually going to introduce its own CBAM mechanism in 2027, and it exempts electricity, which is probably a smart move. The biggest loser in the CBAM saga is Ireland, because around 81% of its power is imported, and all of that comes from the UK because it doesn't currently have interconnectors with other countries, which is already problematic for Irish consumers as they pay some of the highest prices in Europe for power already. Worse still, Northern Ireland shares a grid with the Republic of Ireland. So if power from the GB grid is exported to Ireland, that will be subject to CBAM costs, which could then be priced in if that power is sent to Northern Ireland, which means there's a scenario where the Northern Irish consumers are paying CBAM adjusted prices on electricity produced within their own country.
It's certainly not getting any simpler here, but there's a web of complexities here. Thank you very much for highlighting some of the problems and the challenges that need to be fixed in the next year or so. Thank you, Gabe.
Thank you.
So, is CBAM good or bad for business? To help me answer this, I'm pleased to be joined by Dan Maleski, Senior Environmental Markets Advisor at Redshaw Advisors, and Nick Ogilvie, Product Manager at Carbon Chain, a carbon accounting software provider. A warm welcome to you both.
Well, thank you very much, Richard.
I think, Dan, I'd like to start with you. And could you, in a nutshell, explain what CBAM is and why it's being introduced?
Yeah, too. And as I mentioned, appreciate you having us on. So CBAM, the Carbon Border Adjustment Mechanism, is here really to try and level the playing field between domestic EU industry that has been exposed to a cost of carbon via the emissions trading system, and their foreign competition who exports into the EU who are not exposed to a cost of carbon. See, because EU industry have had this asymmetrical, competitive, and cost landscape, it's been leading to a phenomenon called carbon leakage, which is when EU industry tries to circumvent the cost of carbon via the EU ETS by relocating to jurisdictions that don't have a cost of carbon, such as Turkey or India, and then exporting that good back into the EU, thereby not having to pay that cost. So in principle, CBAM is here to level the playing field by requiring the embedded emissions of goods imported into the block, which are exposed, to be firstly measured, then reported, later verified, and finally procured. In essence, it is requiring the same robust reporting, measuring, as well as and especially costs associated with polluting for foreign competitors which EU industry has been experiencing for the last 20 years.
Thank you. And very elegant nutshell there, Dan. Perfect.
I say it all the time. And muscle memory at this point.
Yeah, absolutely. Off pat then now. Nick, can you, you talk with the metal sector and others as well, and especially with traders. What are the kind of current challenges being posed by CBAM for these sectors? I think Nick, Dan put it very, very elegantly, but it is a web of complexity, this piece of legislation, is it not?
Yeah, absolutely. We've been through we're nearly finished with the transitional period, which started in October 2023. CBAM as a piece of legislation, was formulated a little bit before that as well. So, it's been there's been awareness in the industry, particularly with the European businesses, that this cost of carbon implication is coming down the line. But we've now done nearly 2 years of reporting. There's been no cost implication yet. So many European businesses are happy with the way in which they do their declarations today into the EU, and they're working with their suppliers to measure the emissions of their products in order to understand what the cost might start to look like in 2026. And so the key challenge is really now, we've had some disruptions in some of the supply chains driven by tariff impacts, and now we're getting to the point where, particularly on some of the metal side, we're 6 months from the 1st of January 2026, which will be when the CBAM costs start to come into effect. And that's really the lead time for some of these deliveries for materials being sourced from Asian producers coming into the EU. And so as a metals trader or a fertilizer trader or a cement trader, for that case, all these kind of product categories that are captured under the EU CBAM, you are therefore starting to say, okay, well, I'm about to purchase this material. I'm going to clear it into the EU and sell it to my customer. Maybe it's a back-to-back transaction where I want to lock in the margin that I'm going to be taking as the intermediary here. And so you're presented with, this uncertainty, which is, what is my CBAM cost going to be? And today there's sort of three, pieces of that puzzle, that calculation that you need to understand. The first is the EUA price, so the carbon price in the EU, which I think Dan can talk to a little bit more later on. The second is the emissions intensity number. So, this number that the producer of the material that I'm trading is going to be calculating based on their annual emissions intensity average for those products. And the third piece is this unknown figure, which is the emissions benchmark that needs to be defined by the EU. So actually, today, 6 months to go before the costs come into effect, you cannot accurately give an exact cost figure for what your CBAM charge is going to be for goods cleared from the 1st of January 2026. And for millions of tons of material coming into the EU that, in some cases is being purchased at the moment, that is an unacceptable business risk that many of the traders that we work with, and just in general, large procurers of metal going into the EU, are really tackling right now, which is in their eyes an unacceptable financial issue that they are really struggling with.
It's not as if the rest of the world is very certain anyway, Nick, in the current climate. But I Just one point of clarification or explanation is, you said the 1st of January 2026, but I was under the impression that there was a delay into to February 2026.
Yeah, there is a delay on the cash flow. So the EU CBAM cost will take effect from the 1st of January 2026, where any material cleared into the EU from the 1st of January 2026, you will have a CBAM obligation associated with the emissions that you're importing there. So you'll have to purchase certificates to cover those emissions that you're importing. But the actual cash flow associated with the purchasing of those certificates to cover those emissions imported in 2026, under the omnibus proposal, which is due to be approved in the coming kind of weeks and months.
Cross your fingers. Yep.
Yeah. Cross, that is pushed to 2027. So it's a very dangerous, reality that many, in certain cases, we speak to, some businesses that, their default reaction is, okay, cool. CBAM is delayed until 2027 and we don't have to worry about any of our costs. But that is not the case. The cost needs to be accrued in 2026 and the cash flow implications will come in 2027 when the registry opens to enable certificate purchases in February 27.
I think that's a very important point to clarify that. I think there was maybe a misconception or misunderstanding about that delay in or that push to 2027. Dan, what are your feelings here? I mean, what were customers telling you? What are the frustrations?
I think Nick summarized it probably the best way you can. He mentioned that there are three main critical issues that our steel traders are dealing with. And you have to walk a mile in their moccasins. So if I'm a trader, the thing I'm not really a fan of is speculation and risk. I'm in a business of margins. So what that typically looks like is, let's say I will lock a contract in, and this isn't just, steel traders, it's same with power, same with, most commodity sectors. I lock a contract in, I lock in my profit margin, which could be a few percent, and then I'll wait, for example, until the commodity is delivered or it's executed maybe in a few months from now. And so the idea of when this is going to take place is, I like to say, we've been talking about CBAM for years, and I kept saying, 2023, 2024, hey, this is coming. And even earlier, a few months ago. So a few months ago, we were saying, this is coming, this is coming. We're in a position now where we're not talking years or months, we're talking days. Yesterday, we've been speaking a lot with our steel traders. Yesterday, we have a steel trader who, as of right now, has sold a contract that is baking in CBAM costs because it's going to be custom cleared in January 2026. And when we talk about the numbers here, their CBAM cost is going to potentially constitute about 20% of the entire cost. And that is right now. Now, as Nick mentioned, it's very difficult for them to bake in that cost because they don't necessarily know all the variables. They don't know, for example, the benchmark. They don't know the emissions intensity. And so if I'm a trader, if I'm not really a fan of risk, if I don't want to speculate, how am I supposed to do business? And so the result of this, and it's kind of crazy to hear this, we speak with a lot of traders who are going to cease business. They're going to cease business until they get more information. And so there's a few quite sophisticated traders that can continue to move on, and they have a bit of ability to wiggle when it comes to that risk. But most of the steel traders are looking at ceasing their contracts until potentially September or August. And so what that's going to create is a vacuum. where it's supply and demand. There's maybe a supply of traders are going to be risk off. And so that's going to create increase of premium on pricing. And so the few traders that will have the ability to continue to import are going to make a killing. And so that's what we're seeing with our steel traders. I'd say nearly 4 to 5 meetings a day with steel traders saying the exact same thing, which is, how do we manage this risk? What's going to happen? Now, there's mechanisms to assist in this, but widely speaking, this is a complete, broad market issue that everyone is facing.
So Dan, just to clarify, these are trading firms. So these are importers and exporters of steel. We hear about both the woes of the UK steel industry and also the European steel industry. But what kind of effect will that have? This kind of cessation of trading, what will that have on European industry? It's already struggling at the moment.
Oh, all of these, Nick mentioned earlier, tariffs, and now we have the CBAM. It's just further inefficiency. And so if we look at trade dynamics, inefficiency is going to just create more hurdles. It's going to create a premium, and it's potentially going to slow down trade. And so if Europe is already a net importer of steel, and we're going to throw more hurdles at these poor traders who are already trying to juggle tariffs and the Trump man, and especially now CBAM, what are they going to do? Well, they might back off Europe. I was speaking with a MD of a steel company yesterday, a group. So they all over the world, and they're looking at kind of taking a step back from their Europe operations and maybe focusing more in Latin America or Asia, right? And so these are quite strategic decisions being made as a result of CBAM. And again, CBAM people think is going to happen maybe in a few months from now, but no, it's as of right now, material decisions are being made every single day. I know we're focusing on steel traders, but it's not just steel. Nick mentioned fertilizer. There's going to be most commodities right now. The folks who have to look ahead, because a lot of commodities are sold on a forward basis. They have to start baking that cost today, and it's how do they do that with all these variables that they can't find?
Yeah, absolutely. So, Nick, do you echo those comments by Dan that actually the consequences of this delay and this uncertainty, or the lack of clarity around the costs incurred, it is forcing some companies to close business?
Yeah, I mean, it's having it's a significant cost uncertainty that on fine margins is difficult to justify, and taking decisions around materials that are moving into the EU that have unknown costs, like that's generally a business risk that these entities are not willing to undertake. I think, there'll be quite a significant reckoning in 2026 as we start to see businesses that don't, acknowledge that exposure that they have. I mean, I had a conversation, the other day, which was looking at like, what is the trade-off between accepting anti-dumping duties to clear material in Q4 2025 versus clearing material in 2026 and having to pay CBAM costs, right? Like this is it's not an insignificant cost that if you're not aware of today, then it'd be quite a concerning kind of business implication for next year. But one of the kind of one of the areas that maybe is interesting, is the benchmark intensity figures will dictate what that CBAM cost is. So, if your production and you're buying from suppliers that are producing low carbon material, where the emissions intensity of the direct emissions intensity is low, and you may not have a CBAM cost. So when we get the benchmark information from the EU, if you import material which has an emissions intensity below the benchmark, there is no cost. And so one of the areas that, is Carbon Chain doing carbon accounting work, working with traders and producers of these materials. We're looking to help facilitate the trust and engagement that these buyers have with their suppliers. Because if you can say, this is low carbon material, we're pretty comfortable that this is below the current emissions trading system benchmarks in the EU, then therefore, like there is an expectation that this won't actually have a CBAM charge. These materials won't have a CBAM charge. And so, one of the areas that, we're seeing a lot of interest in, a lot of opportunity around is, identifying low carbon suppliers and really starting to see, more and more that the concept of this green premium, or really just ultimately this, avoidance of CBAM charge, which eventually will start to look like a green premium, coming into a play where, traders are starting to consider this commercial side of sustainability very acutely. and trust in the numbers is key. Like one of the key variables is the emissions intensity of the product has to be verified based on the 2026 emissions intensity. And so you have a year of unknown kind of exposure until that 2026 data is available for you to, sit and wait. So making sure that when you're buying from suppliers and ensuring that emissions intensity, is accurate and trustworthy and ultimately will be verified is something that, we're seeing traders who are looking to, grow and mature with their suppliers of low carbon material to manage and reduce their exposure to CBAM. So, been really interesting on that side to see traders get more in the weeds of the underlying carbon accounting that feeds a lot of this, this calculation.
And I think isn't that key here as well, in terms of the benchmark? A lot of the carbon intensity will change very rapidly, over the course of a few months or years, certainly even days sometimes, and that maybe that's reflected. Or it will be hard to be reflected in those benchmarks, and so actually the carbon intensity may be wrong because it's based on old data.
Yeah, and so the benchmarks we suspect will obviously they will be set based on kind of EU objectives around decarbonisation, whereas the default values will be set around kind of ensuring that there's no circumvention activities taking place. So really. If you're an importer and you're looking to, you don't have good data from your suppliers, falling back on the default values will be even more incredibly punitive, to the point at which that material is, potentially commercially unviable to be cleared into the EU. So for the traders, default values are not an option in the slightest. But if you are, a downstream producer or manufacturer clearing, 10, 100 tons of material into the EU, that cost is readily absorbable. But if you're a trader and you're moving millions of tons of material into the EU, you cannot ignore small, €1 or €2 numbers, let alone 80, €100 numbers that we're seeing in some areas.
Absolutely. So I think that's absolutely crucial here. Dan, can I bring you in and talk a little bit about one of the aspects here which is important in the UK and certainly for UK exporters is that linkage or the connection between the UK ETS and the EU ETS. What's happening in here? What's happening here at the moment?
Yeah, well, a lot. And before I jump in on that topic, just to briefly follow up with something that Nick mentioned, which is visibility. I think it's very key for kind of, something that especially, Carbon Chain is doing, but I always say you can't manage what you can't measure. And so giving these traders the ability to look and understand, to make the best opportunities, it's kind of what CBAM's about, right? It's forcing companies, it's forcing traders and industrials and everyone else exposed to make educated decisions that are going to impact their profitability. And so if they can choose something that, for example, is lower in carbon, that's going to create more profitability and therefore drive investment to create further, decarbonization of processes. And so it's the entire idea of CBAM, which I think is, quite brilliant. And that's why I'm here. That's why I love this acronym and I love this sector, because I truly believe in what it's trying to do here to decarbonize. Now, the topic of linking, of course, is very hot right now. We're 4 days away. So on the 19th of May, we are expecting some discussions to be held, and we shall see what happens. But as of right now, the market's fairly bullish. We are sitting on about an 18.3 million net long position on UKAs. So most of the hedge funds and pension folks, they're quite bullish on some linking conversations. And if you look at it structurally, it makes sense. Linking would be good for everyone. The UK ETS historically has significantly struggled with liquidity, so much so that you can hardly even find option contracts in this market. The UK ETS is fairly light when it comes to participation, just because only about 1,000 companies are exposed compared to the EU, which is north of almost 10,000 installations. And so when it comes to low liquidity, you struggle with price discovery and a whole heck of a lot of other issues that linking would solve. And then, of course, the elephant in the room is CBAM. So we are speaking with a lot of companies, power traders, steel traders, who are really concerned when it comes to UK exports into the EU. There have been more than a few papers commissioned on this topic, and I can cite a few numbers of how much money the UK Treasury could lose and all that stuff. But the main takeaway is this would be a net benefit to most companies and potentially even jurisdictions involved. Now, that means linking, of course, on merit would make sense, but this is very much a political conversation because the conversations around linking are not simply on the EU ETS and UK ETS side. They're also tossing in aspects when it comes to fishing jurisdictions. They're also tossing in, a lot of other, they're heaping a lot into this pile. And so the idea of just looking at this pragmatically of linking would be beneficial. I'd say most folks would say yes. But this is not necessarily always a pragmatic conversation, especially with politicians. And so May 9th is the day. Most folks we talk with are quite bullish, and that is, best example of that is the net long position. But we shall, of course, open our hands and see.
Dan, have you looked at the implications for the power sector, electricity sector? Because I think one of the concerns is that renewable energy and renewable energy flows into the EU are going to be charged a tax through a policy designed to promote renewable energy. It's kind of
Power is really difficult, and I do feel for the European Commission because they're trying to roll out a policy that is broad brushed both industry and power, even though they don't trade very similarly, and the dynamics are different. For example, power is typically traded on the exchange, which is anonymous. So how do you track the embedded emissions of the specific electrons? How do you do that? Now, if we were talking about steel, for example, or even aluminium was traded on LME. You can still have a bit more clarity on this, but power is very difficult to actually track down. And so the result of that is going to potentially create some conversations about, well, has, this power export already paid a cost of carbon? How emissions intensive is it? That's going to be quite difficult to answer. And so the result of this, especially with the conversations we're having with our power traders, is, again, a bit of a risk-off attempt. We've been speaking with a lot of the interconnectors specifically who are quite worried on capacity. And so, some of their clients who buy capacity, they're quite sophisticated. They're the big utilities who are quite switched on. But they also have some folks who are just straight financial institutions that might be based in Australia or America who might not be very switched on with the ETS and CBAM, this whole new complex world that potentially might not be as bullish on, for example, buying capacity. And that's going to really hurt these interconnectors. And the result of all this is going to be potential, again, like steel, this disruptions in inefficiency, especially when it comes to the current delta between the UK and EU ETS, which is always in flux. As of right now, actually, power exporters have a premium over EUAs because when UKA is around, call it £47, stick on top of that an £18 CPS charge. We're talking about a €4 premium over EUAs as of right now for power exposed generations. It all gets very tricky and muddy the further you look into the subject. And so again, if I'm EDF or EON, I'm fine because I have a carbon team operating it for 20 years. They're clued on. But if I'm just some financial institution, again in maybe America, who doesn't know all this as well, I might be risk off, and that's going to potentially disrupt some of the capacity in the interconnectors. And have a wide range of domino effects.
Yep, and I also hear concerns raised about how this is measured. Do you based on the nominations or the actual flows? And I think there is often a discrepancy there because these are real time markets. But Nick, if I can turn to you and say, so what would you like to see happen in the coming weeks? I can real sense your urgency and your desire to get things moving very, very quickly to create more certainty. But for you, what would be the prime, aspect that you'd like to see covered in the coming weeks?
Yeah, I mean, particularly, the cost certainty needs to come into effect pretty quickly. Even if we can get sort of indicative benchmark figures from the EU, like as soon as in the next couple of weeks, like that would be, one of the most kind of powerful components on CBAM to ensure that like a lot of these businesses can start to really understand exactly what the costs are going to look like, even if it's just around the methodology and not necessarily the underlying metrics, so that they can start to sort of piece together the costs and what that will look like for them. So on the traders side, we need regulatory certainty. We need to understand exactly, what they need to be accruing for and factoring into their contracts to be able to make sure that they can continue to deliver the incredibly valuable service that they provide to ensuring material gets into the EU. Steel and aluminium is the core products feeding most of the construction and automotive and key technology that are facilitating a decarbonized future on the electricity side as well. And then on the manufacturer side, we need very swift confirmation, particularly post omnibus, around verification. What does it look like? How do I get it done? Who can do it? And then ultimately that will facilitate that flow of emissions data to the impacted businesses so they can start to get even more certainty around the costs. So, ultimately, whether or not like CBAM is a net benefit or impact on some of these flows, and we will see a lot of changes in these supply chains. Ultimately, that transparency into the emissions numbers and ultimately the carbon cost is kind of fundamental to enable this the mechanism that they're looking to establish here to be effective, but also to enable them to then make any changes that they need to kind of ensure that it maintains, that removes that carbon leakage risk, but also, protects or ensures that there is a level playing field between domestic production in the EU, whatever the commodity or product is, and then the overseas production that is, coming up against this border.
Dan, what's on your wish list for policymakers, if you can add to what Nick's just said? I mean, I sense clearly the urgency here for some form of certainty. That's not always possible in this very uncertain world, but I certainly sense the need for it.
Again, it's really echoing what Nick said. I mean, Nick and I deal, broadly speaking, with somewhat similar clients, just on somewhat different needs. We typically take the financial aspect and the hedging aspect of CBAM. But they still come to Nick and I and then everyone else with broadly the same questions. And there's those 3 points Nick mentioned earlier. And Nick mentioned earlier, it's also just price certainty. So, we, Redshaw Advisors, we can lock in the CBAM costs, but a company needs to know how many CBAM certificates they need to lock in. So if I'm a speculator, if I'm a steel trader, I don't want to speculate. So let's say I have a contract where I'm going to lock in, let's say in May, I need to buy 100,000 CBAM certificates just to cover that cost, right? I'm taking an assumption it's going to be 100,000. I don't know. It could be 105,000. It could be 95,000. Because again, I don't know the benchmarks. I don't know the embedded emissions. And so, sure, when they unwind that hedge, they could just roll it forward. But that's taking a risk because most of our clients, they will not sign a deal, a steel trade, unless they can guarantee profitability. They don't want any kind of speculation. And it makes sense. Nick mentioned earlier, but these guys operate in fairly small margins. And so the spread of, let's say, 4 or 5 euros could completely kill them. And that's not something they want to take a chance on. And so when it comes to some of our more sophisticated clients, they can potentially estimate and do some scenarios on benchmarks and embedded emissions, and then they can go and hedge. But that's only the most sophisticated guys we work with. The majority of folks we speak with, again, they want to take this risk off the table. They just don't know how much to buy. And it's something that's going to completely slow down their business. I can't tell you how many steel guys we speak with that are sitting on their hands right now. And they're going to say, I think we're not going to do anything until, let's say, August or September, or even October, when we have more information. And so there's going to be, 3, 4, 5 month block this summer where only a few steel guys who are potentially willing to either take that risk and speculate a bit more, or are quite clever and can do some scenario bases, are going to be open market on the steel imports, and they're going to make a lot of money. And so those guys will be happy, but the majority of the market is not, because how can they do business? Because they're almost going to have to speculate to an extent. Now they can do option contracts and whatnot, but the option premiums almost make it unprofitable. And so they're really between a hard place in a wall. It's hard for them to operate at all. And so if I'm asking the commission anything, provide a bit more clarity to these steel traders, especially, because they're the folks right now who need to deal with this. Because again, as Nick said, custom clearance could be a 6 to 9 month, forward. So we're already speaking with guys right now who are looking at CBAM costs.
Gentlemen, I've only covered half my questions here, but I think you've made it very clear, and the message is loud and clear. We need more information, need more clarity, need more certainty. So thank you very much for being guests on the Plugged In Montel News podcast.
Pleasure of mine, Richard. Thank you for having us.
It's been an excellent and insightful discussion. I hope you agree, listeners. And thank you for tuning in to this episode. Our podcast episodes are released every Friday. For the latest news from Montel, please visit montelnews.com, and you can follow us on LinkedIn, Blue Sky, and other social media channels. See you next time.